the Great Recession. It still looms over us. Why? Because when the Great Recession hit, because you, the government, decided to come up with all these programs where you can get 100% financing. Do you have a 500 credit score? Cool, we think that you can still make your mortgage payment. You want to tell us what you make for your income? We'll believe you, we'll take your word for it. Because we allowed everybody to purchase mortgages and to buy a home, buy these investment properties, zero down, low credit, 125% loan to value. Guess what happened? When things slowed down, people foreclosed. And when people foreclosed and the economy started to get crushed, what happened? Lending institutions got crushed. And because you allowed so many people to so freely buy all these houses, which they then foreclosed on, banking institutions started to go under, and then they started tightening up their lending guidelines. Now, why does that affect where we are today? I'll tell you why. Because between 2009 and 2013, almost 2014, builders couldn't build because they couldn't get a loan. Mom and pop builders couldn't get a loan from a bank to build a community because the banks didn't want to give them the money. Even large builders had a hard time getting lines of credit because there was no credit lines to be had. The banks were trying to clean up the mess that the government had, and the banks put us in too. So we couldn't build houses for 5 or 6 years in this country. What happens with a country with 330 million people that for 6 years you can't build inventory? I don't know. We have an inventory issue? So we take an already inventory issue that we have, and then 5 years later, we pour on COVID with ultra low interest rates in a still low inventory environment. Bang, everything shoots up. It's just this constant mechanism of not being able to fiscally manage what we have going on. The answer isn't printing money every single time we're in a situation, and that's what this administration thinks it is. And I'm not trying to pick sides here. I don't care. You want to be on the left, be on the left. You want to be on the right, be on the right. The argument has nothing to do with what side you're on. The argument has to do with common sense. Common sense. There's no common sense in this monetary policy. None. Zero. And now you've really made it hard for middle class and lower middle class Americans to even survive in this country, let alone ever now have an opportunity for home ownership. Why? Because you printed trillions of dollars, and years before that, you screwed up because you allowed everybody to buy a house. Those are the two main factors still to this day that haunt where we're at. No matter what you do, there's a price to pay. No matter what it is. You print trillions, you're going to pay it down the line. You allow everybody and their mother to buy a house, you're going to pay that down the line. We have not had consistency in policy, and that's the problem. And so now what is the solution? And the solution is this. I don't know. I really don't. Number one, you have to pull the plug on raising interest rates. When you have major lending institutions that are hurting as bad as they are, eventually we're going to feel the price of that. Number two, you got to calm it down, and maybe there's a mechanism where housing has a different rate level than, and what I mean by that is, just because the Fed raises interest rates across the board, why don't we have mechanisms of where when there's opportunity put back into the economy, like if I buy a car, the only thing I can really put back into the economy with my car is gasoline and whenever it breaks down. When I buy a home, I become valuable to our economy because I'm going to do everything I can to make my home beautiful. It's my home, pride in home ownership. I'm going to update my house. I'm going to take care of my lawn. I'm going to put in new landscaping. I'm going to redo my master bedroom. I'm going to, employ a gardener or whatever. When you own a home, you spend more money into the economy because you have home ownership. But guess what we're doing? We're limiting people from home ownership, and a lot of them, and most importantly, we're limiting those that need home ownership the most. First-time home buyers, veterans, FHA borrowers. We got to figure out a way to change it. These people need home ownership. They're sitting there spending so much of their income on their astronomical rents without having the ability to create wealth. And you're making it worse. But now we got to stop. We have to stop raising interest rates because it's getting out of control. And homeowner affordability is at I think it was around a 35-year high from what I read last. I think it was around there. And interest rates are over a 20-year high. But because of the inflation, home prices have gone up so much. Now we have home prices that are astronomically high, and we have 20-year high interest rates. Just no level of thought, none. We need smarter people in office, and we need better monetary policy. I hope you like this information, but man, we got to do something. We have to do something. Click and subscribe if you like this information and want more of it in the future. Thank you for listening.